There are at least 8 legal forms sitting in county offices across America that can reduce, freeze, or even eliminate part of your annual property tax bill. Most homeowners have never heard of them. And before we go any further, I want to clear up the biggest misconception that keeps millions of Americans from claiming money they're legally entitled to. Some people believe these programs are only for low-income retirees, others assume they're only for wealthy homeowners with accountants and expensive tax advisors, and if you're under 65 and living with a disability, you may think none of this applies to you at all. All three assumptions are wrong. In fact, this report is for far more people than most realize. If your mortgage is already paid off, property taxes are probably your largest recurring housing expense. The county doesn't stop sending that bill just because the loan is gone. You'll continue paying it every year for as long as you own the property, unless you qualify for an exemption. Renters shouldn't tune out either. Property taxes don't disappear simply because you don't own the home. Landlords build those costs into rent. When property taxes rise, rents usually follow. When they fall, it slows the pressure on future rent increases. Whether you own an $80,000 home in rural Ohio, a $300,000 house in Arizona, or a property worth more than $500,000 in California, there may be programs that significantly reduce what you owe. Throughout this report, I'll explain exactly who each exemption is designed to help so you can quickly determine which ones apply to your situation. The reason so many people overpay isn't because the law is unclear. It's because almost nobody tells them these programs exist. County tax offices collect property taxes. Every exemption they approve reduces the amount of tax they collect. That doesn't mean anyone is hiding information from you, but it does mean there's very little incentive for these programs to be actively promoted. No one calls on your 65th birthday. Your mortgage company doesn't remind you. Your closing attorney probably never mentioned them. And your real estate agent almost certainly didn't bring them up either. The average American homeowner now pays roughly $5,000 per year in property taxes. In some parts of New Jersey, Illinois, and New York, annual bills exceed $8,000. Multiply that over 20 years of retirement, and many homeowners will spend well over $100,000 in property taxes. For many of you, a significant portion of that money could have been legally reduced or in some cases eliminated altogether. That's exactly why this video exists. My goal isn't to explain complicated tax law, it's to translate it into practical steps you can actually use. Over the next several minutes, we'll walk through 8 important property tax programs. Some are available in almost every state. Others are rarely discussed, despite being incredibly valuable. I'll also show you when to file each application, what to do if your request is denied, and why no is often only the beginning of the process, not the end. Here's the one idea I want you to remember throughout this video. Qualifying for an exemption and actually receiving it are two completely different things. Nothing happens automatically. No county sends you a refund because you qualify. You have to know the program exists, you have to ask for it, and you have to submit the application yourself. Let's begin with the most important foundation for nearly every other benefit on this list. Form number 1. The Homestead Exemption. This is the exemption almost every homeowner believes they already have. Surprisingly, many don't. Nearly every state offers some version of a homestead exemption for your primary residence. Instead of taxing the full assessed value of your home, the county excludes a portion before calculating your property tax. The amount varies by state. Florida currently exempts up to $50,000. Texas recently increased its school district homestead exemption from $100,000 to $140,000, making it one of the largest increases in recent years. Ohio, Arizona, Georgia, and many other states offer their own versions, each with different rules. The biggest mistake homeowners make is assuming the exemption is automatic. In many places, it isn't. You usually need to complete a short application and submit it before your county's annual deadline, often sometime in the spring. Miss that deadline, and you'll likely pay the full property tax bill for another year. The good news is that in many states, you only need to file once. Once approved, the exemption generally remains attached to your home as long as it's your primary residence. That single application can save hundreds or even thousands of dollars every year. And here's something many people don't realize. The homestead exemption is often the gateway to everything else. Without it, you may not qualify for several of the additional programs we'll discuss next. So here's your first action step. Call your county appraisal office and ask one simple question. Is a homestead exemption currently on file for my property? If the answer is no, ask for the application immediately and find out the filing deadline. It may be one of the most valuable phone calls you make this year. Now let's move to the second form, and for many homeowners, this one is where the real savings begin. Form number 2, the Senior Property Tax Exemption. If your county offers a homestead exemption, there's a good chance it also provides a separate exemption once you reach 65. The important thing to understand is that this is usually not automatic. Many homeowners assume the county adds it the moment they become eligible. In most places, that never happens. You must submit a separate application, and unless you ask for it by name, you may never receive it. The benefit varies depending on where you live. In Texas, recent legislation dramatically increased the additional exemption available to homeowners age 65 and older. Combined with the homestead exemption, eligible Texans can now shield up to $200,000 of assessed value from school district property taxes. Florida offers another substantial exemption for qualifying seniors. New York allows many eligible homeowners to reduce a significant portion of their assessed value. South Carolina exempts the first portion of a qualifying home's market value from property taxes altogether. Every state follows different rules. Some apply income limits, others don't. That's another mistake many retirees make. They assume they're disqualified because their retirement income is too high. But in states like Texas, Florida, Georgia, Tennessee, Alabama, Mississippi, and South Carolina, eligibility is generally based on age, not income. If you're over 65, don't assume. Call your county appraisal office and ask, "Do I qualify for the senior property tax exemption?" That one question could save you thousands over the coming years. Form number 3, the assessment freeze. This may be the most valuable property tax benefit available. Instead of reducing your home's taxable value, it protects you from future increases. Here's how it works. Once you qualify and submit the application, your county uses your current assessment as the starting point. As property values rise over the years, your tax calculation may remain based on that earlier value, or your school taxes may be frozen depending on your state's rules. That difference becomes enormous over time. Imagine your home was worth $250,000 when you turned 65. 15 years later, it's worth $500,000. If you never filed for the freeze, you're likely paying taxes based on today's much higher value. Meanwhile, your neighbor, who completed one simple application years earlier, may still be protected under the lower assessment. The savings can easily reach thousands of dollars every year. Different states handle freezes differently. Texas freezes the school district tax amount for qualifying seniors. Illinois freezes the assessed value for homeowners meeting income requirements. New Jersey offers a reimbursement program that can return part of the increase you've already paid. The mechanics vary. The goal is the same. Protect older homeowners from rapidly rising property taxes. One critical detail catches many people by surprise. Several states only allow you to apply during a specific filing window. Miss that deadline, and you may have to wait another year or lose the opportunity altogether. That's why I recommend contacting your county as soon as you become eligible. Even if you've already turned 65 and never applied, don't assume it's too late. Many states still allow you to file going forward. You may not recover past savings, but you can stop overpaying in the future. And that brings us to another benefit almost no one talks about, even though it quietly puts money back into the pockets of homeowners and renters alike. That's called the Circuit Breaker Program, and we'll cover it next. Now let's move to one of the least understood programs on this list, and one that can put real money back into your pocket every year. Form number 4, the Circuit Breaker Credit. Despite the name, this isn't a county program. It's usually offered by your state. The idea is simple. If your property taxes consume too much of your household income, the state may reimburse part of what you paid. Think of it as a safety valve. Once your tax burden reaches a certain percentage of your income, the state helps absorb part of the cost. Many homeowners have never heard of this program because it's often claimed through your state income tax return, not your property tax office. Even if you owe no state income tax, you may still qualify for the credit. States such as Massachusetts, Maine, Vermont, Minnesota, Maryland, Wisconsin, Illinois, Missouri, Connecticut, and Pennsylvania all operate versions of this program. Some rebates are a few $100s, others exceed $1,000 per year. And here's something many people don't realize. Some states even allow renters to qualify because landlords pass property taxes into monthly rent. If you're retired and living on Social Security plus a modest pension, this is one program you should absolutely investigate. Search your state's name together with the words Property Tax Circuit Breaker Credit. The application usually takes only a few minutes. Form number 5, Property Tax Deferral. This benefit is very different. Instead of reducing your property taxes, it allows you to delay paying them altogether. If you qualify, the state pays the tax bill for you. The balance is typically repaid later when the home is sold, refinanced, or transferred to your heirs. For retirees who own valuable homes but live on limited monthly income, this program can be life-changing. It allows them to remain in the home they've owned for decades without struggling to pay rising property taxes each year. States including California, Oregon, Washington, Colorado, Texas, Idaho, Illinois, Tennessee, and Massachusetts offer some version of a tax deferral program. The rules vary, but one point is extremely important. If you still have a mortgage, check with your lender before applying. Some loan agreements require property taxes to remain current. For homeowners without a mortgage, however, this program can provide enormous financial relief. Form number 6, Disability Property Tax Exemption. Many people believe disability relief only applies to military veterans. That isn't true. A large number of states offer property tax exemptions for homeowners who receive qualifying disability benefits. Age isn't the deciding factor. If you receive SSDI, SSI, VA disability benefits, or another qualifying disability determination, you may already be eligible. Kentucky, Texas, and many other states provide substantial reductions based on disability status. In Texas, for example, the additional exemption available to homeowners over 65 also applies to many qualifying disabled homeowners. That's a benefit many people overlook simply because they assume it's only for seniors. If you're living with a disability, call your county appraisal office and ask, "Do you offer a disability property tax exemption?" You may only need your disability award letter to qualify. Form number 7, Disabled Veteran Exemption. For veterans, the savings can be even greater. Nearly every state offers property tax relief based on a veteran's service-connected disability rating. In some states, including Texas, Florida, Virginia, and Pennsylvania, a veteran with a 100% service-connected disability may pay no property taxes at all on their primary residence. Even lower disability ratings often qualify for partial exemptions. Many surviving spouses also remain eligible under certain circumstances. If you or your spouse served in the military, don't assume you already know the rules. Call your county this week and ask exactly what veteran benefits are available in your state. Many families discover they've qualified for years without ever applying. In the final section, we'll cover the last exemption almost everyone forgets, the yearly appeal process that can lower your tax bill even further, and what to do if your application is denied. Now let's cover the final benefit on our list and one that catches families completely by surprise. Form number 8, the surviving spouse carryover. When a homeowner passes away, many people assume their property tax benefits automatically transfer to their husband or wife. In many states, they don't. Senior exemptions, assessment freezes, disability exemptions, and even some veteran benefits often require a new application from the surviving spouse. If that paperwork isn't filed within the required time frame, often within 1 year, the property tax bill can increase dramatically. Unfortunately, the county won't call to remind you. They simply recalculate the property at its full taxable value and send the next bill. If you've recently lost a spouse or you're helping a parent through that situation, this should be one of the first calls you make to your county appraisal office. It could prevent thousands of dollars in unnecessary taxes. One more way to lower your property taxes. Everything we've discussed so far depends on claiming exemptions. But there's another strategy available to every homeowner. Challenge your property's assessed value. Most county assessors never enter your home. They estimate value using neighborhood sales, square footage, and public records. Sometimes they're accurate, sometimes they aren't. If your home has been overvalued, you're paying property taxes based on an inflated number. Almost every county allows homeowners to file a formal property tax appeal after annual assessment notices are mailed. The process is usually straightforward. Gather a few recent comparable home sales from your neighborhood. Submit your appeal before the deadline. Present your information to the review board if necessary. Many homeowners who actually file receive some level of reduction. Yet only a small percentage ever challenge their assessment. The process costs very little or nothing at all and can lower your tax bill year after year. The filing calendar. Knowing these programs exist is only half the battle. Knowing when to apply is just as important. January through March, watch for your annual property assessment notice. If you disagree with the value, mark the appeal deadline on your calendar immediately. Most counties allow only 30 to 60 days to file. Spring. This is when homestead exemption deadlines usually occur. If you've recently purchased a home, don't miss this window. Around your 65th birthday, ask about both the senior exemption and the assessment freeze. Many homeowners wait too long and lose valuable savings. When filing your state tax return, check whether your state offers a circuit breaker credit. Many people skip this section without realizing they're eligible. After the death of a spouse, contact your county immediately to ask about transferring existing property tax benefits before they're removed. What if your application is denied? Don't assume the answer is final. Many first-time applications are denied for simple reasons: a missing document, proof of residency, proof of age, an incomplete form, or a filing deadline that was misunderstood. If you're denied, request a written explanation. That document will tell you exactly what needs to be corrected. Most counties also provide a formal appeal process. If necessary, you can often request another review or appear before a local appraisal board. Many successful applications are approved on the second attempt after missing paperwork is added. The people who receive these benefits aren't necessarily wealthier or luckier than everyone else. They're simply the people who didn't stop after hearing no the first time. Let's review the 8 programs. Today we've covered homestead exemption, senior property tax, exemption assessment, freeze circuit breaker, credit property tax, deferral disability, property tax, exemption, disabled veteran exemption, surviving spouse carryover. And don't forget your right to appeal your property's assessed value every single year. None of these benefits happen automatically. No county office is going to call and tell you you're eligible. No mortgage company will remind you. And many homeowners spend decades overpaying simply because they never knew these programs existed. Here's my advice. Make one phone call this week. Ask your county appraisal office, which property tax exemptions am I eligible for? That simple question could save you hundreds or even thousands of dollars every year. If you know a homeowner over 65, someone living with a disability, or a veteran who owns a home, share this information with them. One conversation today could save them money for years to come. I'm Daniel Carter. Thank you for watching. Stay informed, protect your retirement, and I'll see you in the next report.